Hello friend, welcome to my channel. Today we are going to discuss about one of the most interesting and important topic known as arbitrage process. Firstly, we are going to discuss about what is arbitrage and we are going to solve two questions of the arbitrage process. Arbitrage is the practice of taking advantage of price difference between two or more market in order to make a profit. Arbitrage is the practice of taking an advantage of price difference, means market value of the stock between two or more markets in order to make a profit. The process of arbitrage involves buying an asset in one market, where it is undervalued, where the stock is having the less market price or which is undervalued, then investors are going to buy those assets and simultaneously selling it on another market it is overvalued, and selling the stock on another market which is overvalued, means which has higher market price. In short, arbitrage process refers to switching of investment from one firm to another firm. Investors switch from having market price more to market price less, switching from one investment to another investment. When a market value are different, the investor will try to take advantage of it by selling their securities with high market price and buying the securities with low market price. I think you have understood about the definition of arbitrage. Arbitrage is commonly used in financial market where price discrepancies can arise due to difference in supply and demand, trading volume and other factors. While we are discussing the arbitrage, there are mainly two cases while focusing on the question. The question arises likewise. The question says in the case first and having in the case second. Case first, switching from levered form to unlevered form, means levered form means an unlevered form, and case second, switching from unlevered form to levered form. What does levered and unlevered means then? Levered means the company or firm having debt. Levered form means having debt in the firm. Unlevered form means all equity financing in the firm, means having all equity financing, there is no debt, there is no debt. Levered and unlevered. Now I think you have understood about the process or definitions. Now we are directly going to solve one of two important questions. Case first, the question is likewise. Case first, switching from levered to unlevered, that means having debt to all equity financing. Question: there are certain steps that you should follow to solve if the question arises from the arbitrage process. If you follow these steps, you definitely will make no mistake and there will be no any confusion. Now let's read the question. The following is the data regarding two companies X and Y belonging to the same risk class. There is two company having the same risk class. Particulars: company X and company Y. Number of ordinary share 90,000, 1,50,000. Market price per share 1.2 rupees, and company Y has market price per share rupee 1. 6% debenture rupees 60,000. Company Y does not have debt. Means company X is levered form, company Y is unlevered form. Because it has a debt, it has not debt, or it is all financed by equity. Now, profit before interest, EBIT 18,000 and 18,000 rupees. All profits after debenture interest are distributed as dividend. Profits after debenture interest are distributed as dividend. Explain how approach. This includes in approach. I think you know about approach in capital structure. Explain how approach an investor holding 10% of share. Investor holding 10% of share in company X will be better off in switching his holding to company Y. That means company X will be switched off to company Y because it has the market price less. It has the market price less than company X. That means it has company Y, which is unlevered form, has market price less than levered form company X. So the investor wants to switch company X from company Y. In sense, there is lesser market price in Y. Now we are going to solve this question. Solution. Firstly, we have to understand the question properly and we have to go through it. Company X, company X, company Y. Company X is levered form and company Y is unlevered form. Now we have to, here is EBIT. Profit before interest means interest before, profit before interest and tax means EBIT. Earning of the company is 18,000. EBIT is 18,000. EBIT is 18,000. Now less interest. You have to follow the same step for every problems or every questions. You will definitely get the accurate answer. Less interest. We have interest in company X 60,000 of 60,000 of 6% debenture. Then 60,000 into 6% means 3,600. Company X has 60,000 into 6% means 3,600. 3,600. Company Y has no interest. That comes EBT minus 18,000. 14400 and 18,000. Now we have you can say that, or you know that, what's the value of equity in company X and what's the value of company Y. There is number of ordinary share and market price per share. Then what's the value of equity in both the company means number of ordinary share into market price per share, it comes value of equity. That is, now value of equity VE, which it denotes, means How much is the value of ordinary share means 90,000 multiply by 1.2 market price. And similarly in company Y it has 1,50,000 ordinary share into 1, that comes to 90 into 1.2 means 108,000 and this means 15,000. This is value of equity. Now we will calculate the value of debt. How much is the value of debt means company X has 60,000, company Y does not have the debt which is unlevered. Now similarly value of debt means VD. This is Y and this is X and this is Y. Value of debt in X 60,000 and Y it does not has the value of debt. Now we know value of firm VF means value of equity plus value of debt which comes to value of firm. That means how much is value of equity 108,000 plus 60,000 of company X and Y. Similarly company Y debt is how much 1,50,000 plus 0, it has no debt. Now what is the value of firm? 108,000 plus means 168,000 and 1,50,000. Yeah, this is value of firm. Now step 1, you have to follow all these steps. The question says that company X is willing to, the investor who has invested in company X is willing to switch in company Y. Now present earnings of investor in company X. How much is the present earning of investor in company X? Means he has holding 10%. It has given investor holding 10% of share in company X will be better off switching in holding in company Y. Means 10% he has holding in company X. So present earning of investor in company X is how much is the earning of company X? Means we have already calculated, means EBT. EBT is the earning of company X and 18,000 is earnings of company Y. So 14,400 is earning. 14,400 into how much is the investing percentage, means 10% is investing, that comes to 1,440 rupees. Step 1 is present earning of investor in company X. Step 2, he wants to switch from X to Y. So he wants more gain, more profit, more income. Then to maximize his income, or profit, investor sell all the share of company X To maximize his income or profit, investor sell all the shares of company X. How much is his holding? His holding is 10%. Now, what he will sell means he will sell the equity which is having 90,000. Then we have the value of equity, how much? 108,000. Then value of equity in company X is 1,08,000, means he will sell all the equity which is having the ordinary share of 90,000 of market price 1.2. He will sell all the equity to Y, means 10,000 into holding means 10%. To maximize his profit, investor sell all the share of company X, means he has the value of equity in company X 1,08,000 and holding in company X is 10%. So how much? 10,000 is the. Now step 3, the company X has its debt. So we always assume that investor will take a loan of rupees 60,000 from the company X. So borrowing in step 3, borrowing debt from company X. Borrowing debt from company X which has 60,000. So 60,000 into, we assume that he will borrow the same percentage which he has holded in the company, means he has holding 10% of the shares in the company X. Like this or likewise, we assume that he will take the loan of 10%, means 6,000 rupees. I think you have understood that. Step 4. Borrowing debt from the company X. Now step 4. Total fund from the company. How much is the total fund? Means he has sale of rupees 10,800 and he has taken loan from of rupees 6,000, means total fund is rupees 10,000 plus rupees 6,000, that comes to 16,800 rupees. He has now of total fund 16,800 rupees. Now in step 5, he will invest all the 16,800 in company Y. Invest all the rupee or invest rupees 16,800 in company Y, because he is switching the company from X to Y, from levered to unlevered. Then while switching or investing from 16,800 to company Y, how much he will get profit in percentage? That is, while investing 16,800 in, how much is the value of the company Y? Company Y has the value of firm, how much? Here it has the value of firm is 15,000. He is investing having the value of from 15,000 means how much is the earning percentage means 16,800 which he has the total fund. He will now invest in all the value of the firm which is having 1,50,000 into 100%, that comes to 11.2%. that means it has more profit than previous. It has only 10% in company X. Now it increased from 11.2%. that means he has taken a right decision. Now step 6, new earnings. It has now 11.2%. now new earnings from company Y. That is how much is the earning of the company Y. We have the earning of company Y is 18,000. 18,000 is company's Y earning. Means 18,000 into, now he has 11.2%. that comes to 18,000 into 11.2%. this is 2016. New earnings that, but we had taken loan. In step 3 we have borrowed a loan from the company X, so we have to pay interest to company X. So we have to deduct borrowing on interest. How much is the interest? Means we have 6% interest rate. 6% interest rate means how much we had taken means 6,000. that is 6,000 into 6% interest rate, that is 36,360. we have to deduct the interest. Now this is our arbitrage, this is our new earnings. Now 216 minus 360, that is 1656 our new earning. 1656 our new earnings. Now how much we have earned, how much increment we have gained, means we have in step 1 if you see there is present earning of investor. Present earning means in company X, that is only 1440. Then while we switched from company X to Y, we had got a new earnings of 1656 which is increased. How much is the increment? Now in step 7 increment in gain, that is also known as arbitrage gain. That is step 6 minus step 1. Step 6 means 1656 rupees minus 1440, that comes to 216 is our earnings, means arbitrage gain. If you follow all these steps, you will definitely make no mistakes in the exam. Now we are going to discuss case second, switching from unlevered to levered. As we have already discussed about levered, how to switch from levered to unlevered, and we have also calculated the arbitrage gain. Now similarly, we are going to discuss about unlevered to levered. Question: the following is the data regarding two companies and companies X and Y belonging to the same risk class. Company X, company Y. Number of ordinary share 90,000, 1,50,000. Market price per share rupee 1 and rupee 1.2 in company Y. 6% debenture. Company X has 60,000 and company Y has no value, means no debt, means it is fully equity financing, that is unlevered. Company X is levered, which has debt. Profit before interest, EBIT 18,000 and 18,000. Now all the profits after debenture interest are distributed as dividend, is like similar question. Explain how approach an investor holding 10% of share in company Y. Company Y will be better off switching his holding to company X. In previous question, we have discussed about how we switched from company X to company Y. Now we are reversing the question, and the investor wants to switch from company Y to company X. If you know what we have discussed already, company X has only rupees 1 of MPS market price per share and company Y has rupees 1.2 of market price. So company Y, who has the overvalued or high market price, wants to switch to company having low market price or market value or undervalued company, which is also known as the arbitrage process, we have already discussed. Now we are going to discuss about the its solution. Let's start the solution. X company and Y company, we have already discussed the all detailed steps. Now we will follow the same steps, but there is 1-2 problems that will arise while solving this question. Now we have EBIT 18,000 and 18,000. EBIT of the company X is 18,000 and Y is 18,000. Less interest. Company X has interest of 60,000 of 6%, means 3,600, and company Y has no debt, means 0. Now this comes to EBT. 18,000 minus 3,600 means 14,400. This is 18,000, sorry. Now value of equity, I am writing in shortcut. Value of equity, how much is the value of equity in company X, means 90,000 and which has market price of rupees 1, and value of Y with ordinary share of 1,50,000 and having the market price of 1.2 rupees. Now value of equity means 90,000 into 1, and in value of Y, company Y, 1,50,000 into 1.2, that comes to 90,000, and 1,50,000 into 1.2, 1,80,000. Value of debt in company X, we have the value of debt of 60,000, but in company Y there is no value of debt. Now value of firm is value of equity plus value of debt, which comes to 90,000 plus 60,000 is 1,50,000, and value of firm in company Y is 1,80,000. It is simple, it's like before. Now in step first, present earnings of investor in company Y, because he is the present investor or he is the investor in company Y in present date. Is there is question that 10% holding of the share of the company Y will be better of switching in company X, means he is investor in company Y, he wants to switch in company X, means present earning of the investor Y in company Y is, how much is the EBIT or EBT, earnings of company Y is 18,000. Earning of company Y is 18,000 into how much is the holding in company Y, 10%, means it comes to 1800. This is his present income. Step 2, to maximize profit or income, he will or investor will sell all the share, all the share भनेको all the share means he has the value of equity of 90,000, value of equity of X in 90,000 and value of equity in Y is 18,000, 1,80,000, means he will sell all the 1,80,000 value of having the value of equity in company Y, which is holding of 10%, means 1,80,000 into 1,80,000 into 10%, that comes to rupees 18,000. Now step 3. In step 3, if you remember, we are taking borrowings debt from company Y is 0, because company Y is all equity financing, it has no debt, so we are not taking any debt because it has no debt, so borrowing debt from the company Y is considered at 0 in step 3. Step 4, if you remember, total fund of investor, how much he has money today, means step 2 plus step 3, that is rupees 18,000 plus 0, it is 18,000, which he has total fund to invest. Step 5, invest rupees 18,000 in company X, means present investing holding, or he has the profit of only 10%. Now how much is the percent while switching from Y to X, that is 18,000 divided by how much is the value of company X, how much is the value of company X, means 1,50,000, which is value of firm in company X, means 18,000 divided by 1,50,000 into 100%, how much is the profit percent, means 12%. Yeah, he has taken the right decision, is he has earned previously only 10%, now he is earning 12%. Now step 6, new earnings, in company X. How much is the new earnings? Now we have the EBT in company X is 14,400 into how much is the percentage, means 12%, that comes to 14,400 into 12% is 1728. Now we have to understand that there is no debt in the company Y, but there is the debt in company, there is debt in the company X, means we should assume that the investor invest in debenture, invest in debenture equivalent to 12%, equivalent to 12%. That means the company X has the debt of 60,000. In this 60,000, the investor has to invest 12% of 12% of debt in company X. Now, if he investment in debt, that means that is or interest on debt. If we invest in debt, then we will get interest in any maturity period, which is income. Now, company X has debt of 60,000, and if we invest 12%, as we have previously borrowing, how much? If you see previous 10% we have borrowed. 10% we have borrowed in previous question. Now we will invest 60,000 in equivalent to 12%. We invested 12%. In 12% investment, we will get interest, which is having 6% interest rate. I think 6% of debenture into 6%, which is our income. This is our income. This is our income on investment. That comes to 60,000 into 12% into 6% is 432. Now new earnings means total earning. Total earning means, let us say this is A, this is B. A plus B means 1728 plus 432. That comes to 2160. We have the in step 1 present earning is only 1800. Now we have 2160. Now arbitrage gain. Step 7 increment in arbitrage or arbitrage gain. That is step how much? Step 6 minus step 1. Step 6 minus step 1 means 2160 minus 1800. That comes to 360 rupees is our arbitrage gain. I think you have understood. About this. Thank you so much for having time. Have a good day. Goodbye.